Good morning, traders. Welcome to the daily analysis for GBP JPY, April 29th, 2009. Time is currently 7:53 GMT. Looking at a daily chart right now. Yesterday's daily candle, obviously a very big sign that we could be headed for a reversal. Um, all of last week, it was very hard for the market to continue lower. We did continue for a little bit, but it's been very choppy price action. And even continuing into this week, we again made new lows, lower highs, lower lows, but it was still kind of hard pressed to continue a bearish trend. So something that I wish I had seen a little bit earlier, but uh, didn't really seem that important at the time because of the main daily channel, is this possible trend line that the market may be paying attention to. Um, there was one touch here, two, three. It's after the main low, but this could have been an overextension, and the market was trying to use it until we had clearly broken it, so it used the next level up. But this is a trend line right here, one, two, three touches, and then we touched it again for a fourth time, so it is there, and um, it is important. So I wish I had seen it a little bit earlier. Hopefully you guys saw it. Maybe you did, maybe you didn't. But it is there. So the daily reversal candle, it may or may not be a for sure reversal, but we'll see what happens. Looking a little bit closer though, CCI trend line that we drew, obviously, after the daily analysis last night, um, the pound yen turned a little bit bullish, and right now we are, if the day were to close right now, we would break this trend line. So if it turns into a very bearish day, keep an eye out for that. Um, Moving down to the 4-hour chart, or actually just before the 4-hour chart, keep in mind we still do have this 145, 145.70 area resistance level. So um, the bulls aren't kind of out of the trouble yet, so to speak. Um, One thing I have not looked at. We'll keep this old support level here for the time being. Keep the channel there as well. Uh, this has its own reasons because old support can become new resistance. So zooming in a little bit, we do have this newfound trend line. We'll change the color a little bit. Um, go with purple. Looks good. Okay, so here's our new trend line, purple, and here's our old trend line. So up to around the 143.50 today, and tomorrow would be about 143.70. Those could be areas to sell off in the market because we did break this trend line, and a retest and a bounce off of this trend line would possibly indicate further decline. That would be confirmed by a break of the newest low, which would be a break of the 139 level or 138.99. But right now my bias is a little bit neutral because of what the market is doing, and I'll explain a little bit more about that. So on the daily chart, we have a potential reversal signal, although it's a little sloppy because of the slight ranging on this channel. Potential reversal candle. We do have a newer high today, but that does make a little bit of sense when you look on the lower time frames. Moving down to the 4-hour chart, we had a trend line holding the downtrend. Here we have the starting point, 1, 2, 3, 4 touches, and we were finally able to break it just as the new candle for the day opened. So a little bit of a reversal signal right here, right around the 139, 140.50 candles, the low of 139, and they closed right around 140.50. So a potential buy signal there that you could have used. I did recommend selling off this purple trend line right here, and that could have been used for anywhere to 50 to 100 pips. Um, so looking on the 4-hour CCI, get rid of that trend line. Obviously, it does look, it is in a bullish kind of trend for the time being, and it is right now we're close to the trend line, but not testing it. So the next 4-hour candle that opens could be another bit of consolidation before either a potential rise up, bouncing off this trend line, or a little kind of break lower to, we'll move lower to break this trend line and descend. Buying points right now, let's zoom out a little bit to see everything. Off of this very rapidly descending trend line, off the 4-hour chart, and where it converges with our newfound daily trend line, this purple one, right here would be an excellent buying opportunity. It's where two major trend lines come together. It represents a big area of support for this trend line, and a big area of support for old resistance becomes new support. Coincidentally, this point does fall right at the 139 level, so if the market were to bounce off this level, it would create a double bottom from here to here, and that would be a very bullish signal for a strong reversal. So just something to keep an eye out for. Zooming in back to the 4-hour chart, we do have that 145 level, and we do have the old channel in green here, so I'm going to say that right now my bias is neutral, as I've already said, but keep in mind that there's a lot of support and resistance on both sides, and it really does seem like the market is fighting strongly on both sides to pick a direction. So I would recommend sells off the 143.50 area for tonight and today, and stop losses for that would be about just above 144. If we do get up to the 145 level, I would recommend selling off of this this area. I would not recommend buying on a break of this green trend line. It's going to be a little bit harder to tell when it actually breaks, and you might have to deal with more drawdown than you are comfortable with. So sells off of 145, sells off of the 143.50 area, and buys off of the 139 level, as well as 141 or anywhere along this trend line if it reaches there at some point during the day. Obviously, projecting wise, that point would essentially be about 2 days away, but that's a little bit long. Another trade opportunity, as I say, always pay attention to support and resistance that forms throughout the day, kind of thing. On the 1-hour chart, we did have this triple top when the week opened right at 142.03 area, 142, 142, and then early yesterday or midday yesterday, another. There was 3 touches on that, so that represented a very solid potential trade to enter on a break, and it hasn't really moved anywhere from there since. But what you can see is that it did initially break by about 30 to 40 pips, came down, went back up, so your trade would have been profitable. What you'll notice though is we haven't been able to break back below this level. So on a very short-term scale, this might be something to consider entering short on if the CCI is also in agreement. I would say right now we're about to make possibly a potential trend line either from here. If we start moving up, it would be a confirmed trend line on the next hour candle, or from here to here. But again, we have to start moving up a little bit for this trend line, either one of these trend lines, to kind of be confirmed as a trend line. So keep in mind that we haven't really been able to get back below the 142 level, so this might represent an intraday kind of level to trade off of. We're in a ranging mode, and right between 139 and 145, there's a lot of opportunities on both sides. I hope you guys use them to your advantage, and as always, trade smart and safe.